everybody, raise your hand if you know what a 1099-R is, or 1099 in general. I do. Most of you probably do not, or if you do, you don't know how to affect you, specifically if one is erroneous or not. Ooh. That's more like spooky music. Shouldn't be Christmas music. But hey, this is where we're at. Morgan's back on, and we're going to dive into that. So Morgan, without further ado, why don't you download us on the whole situation and everything.
Okay. Kick your feet up for a second. I'm going to tell you a tale. It does start off a little bit like a Halloween type tale because it's a little scary, but we have some Christmas tidings at the end. So, had a client in tax year 2019, an account administrator for an investment fund issued a 1099-R that was erroneous. Okay. This led the IRS to assessing additional tax against my client and then capturing a massive refund that was rightfully due. So here's the backstory. In 2015, we had a client who invested $90,000 into an investment fund. The fund closed in August of 17 with a profit of $16,000. Then those funds were reinvested in February of 18 into a different investment fund. In April of 19, hope y'all are keeping track on this timeline, the account administrator, the record keeper for my clients' monies in these accounts, resigned their position because my client had moved, wasn't keeping track of everything, and the credit card they had on record with the account administrator expired. So there was no way for this company to keep charging the fees for the oversight. And they resigned from the account, and my client just wasn't paying attention, right? They deal with pretty high dollar transactions and just out of sight, out of mind, moved, didn't even think about it. The account administrator then issued a 1099-R for $196,000. Now, the 1099-R included not just the original $90,000 investment and the profit earned from that first fund when it closed, but then also added on top of it the investment into the second account. So it created this $196,000, and this company said, you know what, we're not in charge of this account anymore for this taxpayer. We wash our hands of it. Here's a 1099 IRS for $196,000 that this taxpayer received. Now, 1099-R, Stoy, do you want to fill them in on what those are?
I mean, I don't even know all of that much, right? My recollection of a 1099-R is a 1099 in terms of retirement distributions.
It is a distribution. It's a distribution from pensions, retirement funds, annuities, IRAs. So essentially what this account administrator did was said to the IRS, all of these positive financial transactions that we've overseen, we're just lumping it all together and reporting to the IRS in this taxpayer's social security number and name that they had $196,000 in transactions that have essentially been distributed to them. So not only were their numbers wrong, but the money never left the fund. It was just the account administrator stopped being involved, right? So skeezy, right?
Skeezy. Was it in a retirement fund too?
Pardon?
Was it an actual retirement fund though?
No, it was just an investment fund.
On top of all of it?
Yep. So
There's
taxpayer.
So that.
Pardon?
There's so many layers to this.
I know, so many layers to this. I mean, when I first became involved, I had to write everything out in a timeline and say, okay, I want to make sure that I'm following this properly because this seems so outlandish. So remember, the taxpayer moved, right? They never received a copy of the 1099-R that was issued in 2019 in their name. By late 2020, the fund, the second fund that they had invested all these monies into, had lost a bunch of money. It closed, and the taxpayer ended up receiving $57,000 and a realizable loss of over $48,000. Okay. So in 2021, the IRS contacted my client and said, hey, look, we got this 1099-R from this account administrator reflecting 2019 activities, and you've got $196,000 of unreported income. We're going to propose adding tax to that year. And the client's like, wait a minute, I didn't first of all, the money never left the fund. I never had $196,000 in it. What is going on? So he tried contacting that account administrator. And these people were so rude. And they said, you know what, if you've got a problem, you need to deal with it with the IRS. We're not fixing anything, right? This happens more than you can imagine, which is really sad. There's just no integrity sometimes with these situations. So my client contacted the IRS and said, look, there's a problem. First of all, the fund never had $196,000 in it. And second of all, never took any money out in 2019. This is wrong. Well, the IRS said, no, you got to go back to the account administrator and fix it with them. They need to issue a correction. So this goes on back and forth. The IRS in 2022 ended up capturing from my client's 2021 tax return over $116,000 in refund the client was expecting, and they applied it to this debt, to this proposed additional, well, at that point it was an additional tax assessment. So my client's out $116,000, had never had that much money in this fund to begin with, and is like, I don't even know what to do. I can't get the IRS to help. I can't get this account administrator to fix their error. He tries a couple more times, rounds between the two, can't get anything done. Finally reaches out to us in December of 23. And like I said, I had to write down the whole timeline so I could make sure I understood it correctly. But he was right. This 1099-R should have never been issued. And it never should have been issued for the original investment, the profit earned on that original investment, and then the reinvestment into the second fund of those same monies, right? So we knew we were dealing with like taxpayer bill of rights issue. One of the taxpayer bill of rights that the IRS acknowledges, you can look it up on their website, is you have the right to pay no more than the correct amount of tax that you should justifiably owe. Okay. So we knew this client's taxpayer rights had just been trampled on all over the place. So we submit a request to the IRS in January of 24. And all of the documentation, we ended up getting a letter from the person who had proctored the fund, the founder and manager of it. He ended up writing a letter saying, hey, this taxpayer never withdrew money in 2019. We don't know what happened with this company, but we can attest to the fact that no monies were ever withdrawn. We had copies of statements showing no movement of monies in 2019. So we submit that in January of 24 with like 45 pages of supporting documentation. And then we start receiving notices from the IRS saying, oh, we got your correspondence. We need 90 days to look at it. We got 5 rounds of those. We'd wait 90 days, then get another one, and then wait 90 days and then get another one. And meanwhile, we're calling the IRS. The case was being handled in Fresno. And they said, yes, we see it here. We're just waiting for somebody to handle it. And when we got our 5th 90-day notice letter, I said, this is enough. We contacted the taxpayer advocate, got them involved. And from July to September of 2025, I had 4 conversations with the advocate. She went through everything. She put on armor, went to bat with the Fresno office for our client's interest. Ended up not only getting the $116,000 back to him, but also over $30,000 in interest. So that's why I say it's a Christmas story, right? Even though the IRS had $116,000 of my client's money tied up for almost 2 years, we ended up getting interest paid on all that money.
First of all, the layers to this story.
I know, right?
Like this is there's a movie about this, right? What's crazy, I guess the part that I took out the most, not the most, the thing that I didn't think was going to happen at the end of this story was the fact that you also got interest. Because that's one thing that the IRS and the government are really good at doing, is not applying any interest back to you when they're at fault. So I love that part of the whole story, but holy crap. So let's walk through this a little bit.
I know. That was a mouthful, wasn't it?
Client invests in a fund in probably 2018?
2015. It was $90,000.
So Invest, it does what it does. They obviously have administrator of it. In 2019, or before the payment ceases because he moves, loses sight, out of sight, out of mind situation. 2019, they say, screw it, we're done with it. So instead of us putting it on our books, we're just going to submit a 1099R, get it out of here and not deal with it, leaving him with now a giant tax bill come when the IRS finally found it in 2021 of 116,000, right?
Correct. Well, no, they had said, so the tax was 116,000. The account administrator reported 196,000 was distributed.
Which did not happen.
Totally false.
Right. So
Right.
we're talking about 2019 when he 2020, 4 years of stress out
Mhm.
of all of his money because it's no longer to be there.
Right.
Going back and forth 5 rounds at 90 days is stressful enough. I'm sure he got many other notices that the IRS automatically spits out anyway that terrifies everybody. Finally gets
Absolutely.
you involved, and when you guys are involved, still not a lot of movement happening. Luckily, we had an advocate decide to put the armor on and do their job, which is amazing.
Yeah.
And
Which is an anomaly right now because they're so overwhelmed with the inefficiencies at the IRS.
and it all works out very well in the end.
I know. Wrapped it up with a bow at the end, didn't we?
One, it's scary. It's scary situation. But I also want everyone to realize that one, mistakes happen, yes. But when you receive a notice in general from the IRS, a 90-day or a 60-day or scream out top of lungs that you owe this much, typically those are just, I don't want to call them scare tactics because they don't necessarily do it on purpose, but they're scare tactics, right?
Mm-hmm.
They're to get you to act and to move immediately. And usually you'll make a mistake out of fear. If he wasn't intelligent enough to understand that and to just let it happen, we're talking $146,000 that now he has that he didn't have before.
Right.
And I want to summarize that of people, do not be afraid. Take it to somebody. Those notices, those letters are not always accurate. Mostly are just automatically generated because something popped up.
Correct.
Human has not reviewed them. Hence the 90 days because they're waiting because they're understaffed and government shutdown. And you name all the things are into that. And so I want to take that from it. But what did your client take from this process and scenario?
So, one of the things is to be proactive with checking the third-party reports on your behalf every year. So, all of us can access our tax account on the IRS's website and pull records. They call it the wage and income transcript. You can pull that to see what has been reported in your name tied to your social security number. So,
right?
Yes, so simple to do, but it is you being proactive and owning what's being reported in your name. If you do that, you're going to stay ahead of any type of situation like this, where the IRS says, hey, we got reports, we took your tax return and we have these reports from third parties. And when we compared everything, which takes them 2 or 3 years to do, we found a discrepancy. So we're going to automatically jump to the worst case scenario and think you just intentionally didn't report this income. So now we're going to propose an additional tax against you. So yeah, being proactive with just reviewing what's being reported in your name and associated with your social security number can shortcut a lot of headaches and problems in the future.
Absolutely.
Second thing is be proactive when you move. Make sure absolutely everybody you can think of that has any reason to be communicating with you has your new contact information. I mean, part of the problem is I can guarantee in hindsight, and my client has agreed to this, that they probably didn't do their due diligence with making sure that account administrator had their new address. Yep. So
which probably would have solved all these issues. So at the end of the day, technically still on them. However, there are still things that happen that shouldn't have happened. There's a lot of things in place that happened that should never have let this happen too. But
totally agree. Totally agree. And the last thing, as you had said, Stoy, if you get some type of scary, hairy, three-eyed monster notice from any of the tax agencies about anything, get in touch with somebody to help. You may not have to do anything beyond submit a simple response to clarify a misunderstanding. But if you don't reply, they're going to always assume the worst. They're always going to err on their side, whatever benefits them versus what benefits you.
And I will leave it with this too also. Everyone's like, well, why, if the IRS or if the government already knows exactly how much I made, why don't they just do it? This is why. These are reasons why.
No.
These are reasons why you need to have a professional do it, because these
Yeah.
situations happen.
Absolutely.
With that, though, Merry Christmas to your client. Merry Christmas to everyone who heard the story and the good outcome that came up of it. Do think about the holidays. I'm glad we talked about this definitely now, because guess what? It's tax season, everybody. It's here. It's time to review. It's time to get ready as we go into the new year. So, Morgan, I appreciate your time. And
Thank
everything
you.
especially for that client, because that was a doozy.
I know. It was so tough, but dang, like I said, it had a bow on top of it at the end, right?
It did.
Thanks so much for having me, Stoy. I really appreciate being a part of you and your mission on helping everybody kind of relieve anxiety and fear when it comes to everything financial. So
Thank you for being part of it.
thank you.